presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Good afternoon, folks. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in, kicking off your afternoon right here. And boy, we got quite a market going on, and we got a lot of moving parts in this market, folks. The biggest moving part right now is tariffs. And yeah, the tariffs are off, and let's kick it off with the headline. Trump backs off Greenland tariffs, citing a quote-unquote framework deal. Let's see what that deal looks like as potential volatility, pushing it off to the future. But yeah, framework of a future deal. And yes, unclear what that agreement entails. We have formed the framework of a future deal with respect to Greenland and, in fact, the entire Arctic region. Based upon this understanding, I will not be imposing the tariffs that were scheduled to go into effect on February 1st. So there's a release off of risk. And yeah, there's your acceleration, man. S&P's up by 100 points, up 1.5% at 6930. NASDAQ 100, we're up by 1.8%. Look at that two-way volatility in this market, man. Now you have a Federal Reserve case in front of the Supreme Court. Okay, the arguments were held on that this morning. You can listen to those live if you want. Appears wary of Trump bid to fire Cook. Now, who knows what that means, all right? You can go listen to those arguments if you want for yourself. But the Supreme Court, so you get the Fed in focus, you get the tariffs in focus. Of course, we have a Fed decision 1 week from today. Yeah, we'll see what happens there. A lot of moving parts, but tariffs are off and stocks rejoice. You jump over the VIX. 1695. We were at 21 almost this morning, almost 20 on the open. And yeah, volatility coming out of this market right now. We jump to yield, same thing, reverting a bit. You got a little bit of higher price, lower yield. Now, all things considered, okay, we still got a problem when it comes to yield, man. You got lower price, higher yield today. You get a brief reprieve. But this move started when we were at 112.17. We're at 111.21. You're almost still a full point below where we were just on the 15th, which was last Thursday, coming into that number. Jump over the dollar right now, up 15 pennies at 98.73. You go into the 5-minute for some volatility on the dollar. You were at 98.40. There's your volatility on the news breaking that the tariffs are off. We're at 98.79 right now on the dollar. And metals continuing with the volatility. And boy, they were running to metals, and now they're running from it. Be careful in this metals market, folks, okay? Especially if you're in some of those equities. There's nothing wrong with holding them, but put a stop in place. All right, I was looking at the program yesterday. You look at some of the biggest equities out there. Barrick, you're off by 2% today, okay? You know, you're going to see some quick turnarounds here on the equities if we really start to get a pullback. And I don't think we're going to get a rip-roaring pullback in gold. All right, but we haven't had any real substantial pullback in a long time, folks. Realistically, this has been a straight shot for almost 2 years now. Okay, it was about February 2024. You were at 2,000. We're pushing 5,000. You got two consolidations in there and a brief pullback at the end of 2025. That's it. Now, 5,000 is hanging out there. Nice round number. We'll see if we can ring that bell. But right now, you got metals under pressure. Okay, and on a weekly basis, maybe you just got to come back and test this high volume area, right? You got a high out there, 43.92. That's $400 below where we're at right now, but that would be a nice test. You pull back on lighter volume. Now, on a weekly basis, right, we already have some big numbers. It's only the second day of the week. It's a short week, but look at these 2 days. Look at these 2 days. Okay, and this could be a blow off top, folks. You know, you come in, we got all that volume. You got volume at the highs. You do. But things are getting a little funky at these highs when you move into this degree. A little bit parabolic, okay? Silver's the same deal, except you do have volume, right? Gold has all that volume in October. Silver's ramped it up, man. Highs last week with volume. You're probably not going to do it this week. You take a look at the daily, not even close to as pronounced as gold. Okay, this was a real risk off. What the heck am I going to buy if we are going to now be levying tariffs if we don't get to take over territory, right? And gold was a big benefactor there. Silver, not so much. It was, but not to the same degree as gold, not with the volume at all. Well, that's unwinding a little bit right now, but it also points to the fact that silver doesn't have that same store value when you have this type of a degree run up. If you're looking for safety right now, all right, silver's a more speculative asset just because of the recent run up. And hey, longer term, okay, I think rates are going to be under pressure. You know, there's a lot of talk right now about the TLT. Longer term yields, very high. You're going to get a new Fed chair attempting to bring those down. But when it comes to mortgages right now, it's not happening, right? You check out this chart. How's that for lower price, higher yield, right? Now, what I've often said, okay, is that we're biased to think that we're going anywhere near where we've been in the past, when we had rates hovering near 0%, okay? We have this recency bias of an environment where rates are probably not going back there anytime soon. So don't get caught into this trap of saying, oh, the TLT is at 87, okay? Rates can only go down from here because they're so high. That's not the case, folks. Okay, that doesn't mean you have rapid inflation, but it's not that simple. It's not at all. Take out this huge chunk of area, okay? And I remember Larry Pesavento on the air, right, talking about German bonds, negative, going, it doesn't work this way, folks. It's not going to happen. It's got to come back to reality. Nobody pays you to hold their money, and then you give them back less money, right? You got a negative 1% interest rate. You give somebody $100, they give you 99 back in the next year. That's what was going on in many Euro nations during that time. So rates under pressure, but right now I think the impetus is going to be that they're going to try and get that under control, okay? And that's going to face some weakness in the dollar. And you're right up against that trend line right now, 98.74, 98.79. And on a longer-term basis, when it comes to metals, yeah, that's going to give metals a lift. But guess what? This market needs to breathe, okay? We haven't allowed this market to take a breath in 2 years. Now, you consolidated for 1, 2, 3, almost 4 years. Right? But we're talking about a 24-month run, man. Remarkable. All right, we jump over to Netflix. Netflix out with their earnings last night. We'll talk about this a little later in the program. They catch a little bit of a lift today. They're going after Warner Brothers, of course. They upped that offer to all cash yesterday. Netflix off 2.8% right now. Now, revenue is supposed to grow 13%. They grew at 16%. They're not growing as revenue as fast as they want. You know what's going to help? More content. Yeah, they got a system. They've perfected it. They've got a system, and that system's selling ads, and they need more content, and they're going after it with Warner Brothers. Warner Brothers $28.50 right now, and Paramount Skydance looks like it's not happening. Hey, you know what? As a long-term holder of that equity, and listen, folks, this is a growth equity, tiniest portion of the portfolio. Okay, it doesn't get more growth equity than this thing, right? But longer term, yeah, they're going to be a player. Paramount, they're going to be a player in this. And you know what? Maybe it's not the worst thing if they don't go spend $100 billion for Warner Brothers. Because you see how Netflix is reacting? S&P's up 99 points. We're coming right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. You jump over to Netflix, trading at $84.68 for Netflix shares. And yeah, spending mounts. You better believe it, man. Netflix shares slide, and you talk about spending. All right. Now, number of customers, 325 million subscribers. You talk about a number, man. 325 million subscribers total. Closing the Warner Brothers deal is going to add $275 million in costs for this year on top of the $60 million that they spent last year. Pretty remarkable, right? You're spending almost $500 million just when you're working through that, let alone what they're going to have to spend to incorporate those two companies that once they get it done. Netflix forecasting for the current quarter, 76 to 82 cents. Sales, $12.2 billion. And yeah, they trade lower on that number. They talk about the $27.75 a share deal for Warner Brothers Discovery. That deal is all cash now. So sales of $45.2 billion in all of 2025. For all of 26, Netflix looks for sales to $51.7 billion, which would be growth as much as 14%. I saw 13% on a different article I was reading earlier from Bloomberg too, I think. Maybe it's the Journal. Decent operating margins, right? On that type of a number, you're doing almost $52 billion, and your operating margin, almost $1 out of every $3. Not bad, man. Not bad at all. But nonetheless, slowing growth, right? You got 16% revenue growth, now you got 13% revenue growth. You don't think Netflix knows that? You don't think that's why they're playing hardball with Warner Brothers Discovery? You better believe it. The only question now is if the Ellisons are going to bring it even further, and the market doesn't think so right now. Not even close. They're not pricing in anything to that degree. You jump over to Disney. Disney up 2% today, 112.57 right now. So the consensus seems to be that the Supreme Court looks likely to let Fed's Cook keep her job. And that's how Bloomberg said the justices are wary. The Journal says, and I encourage you to go listen to these oral arguments, folks. You can't watch them. We probably should be able to watch them at some point, right? It's kind of cool being able to listen to them. That's how it was. But at this stage, maybe you get some video. Everything turns into like a courtroom drama, so I get why the Supreme Court might not want that to happen. But it's interesting no matter what way you want this to go down. Okay, watching this play out, the arguments, they let, the Solicitor General, they let the lawyers state their cases, and the reason why you can usually tell which way they're leaning is that the justices don't hide their legitimate questions, right? They ask those questions of the lawyers to give them a chance to make the argument or the counter argument. So their points really usually come out. You can usually get a good indication, not because they try and telecast which way they feel, but because they're asking the questions they have, allowing the litigators on each side to make their case. So you can kind of tell what they're pressing. So we'll see how that plays out. But you have a Fed decision 1 week from today. And when we jump over to the Fed, in terms of what the market's pricing in right now, only a 5% shot, okay, that we get a cut. Right now we're at 3.5 to 3.75%. The next meeting's a week from today. The market says about a 95% chance they're doing nothing, staying right where we are. You go out to the March meeting, still an 82% chance. The market's thinking no cut. And you go out to April, market says not yet. 27% chance we get a cut by then. 3% chance you somehow get two, but about a 70% probability from swaps right now that you get no cuts. Now, what does happen is that you get to June. Now, we get a new Fed chair in May, but there's technically no meeting. Not technically. There's no meeting in May. Fed meets every 6 weeks. Okay, not every month. They meet every 6 weeks. And so the first meeting of the new Fed chair, whoever that is, June 17th, and just then, I mean, can you imagine what this world's going to be like? Okay, if we get a new Fed chair come June 17th, Powell goes 3 meetings without a cut, and they go no cut. Oh. And there's a 40% chance right now. The market's pricing that in. Substantial. Okay, substantial. You go out to July, still only a 43% chance that we get a cut by then. 30%. All right, I think there's a lot of room for rates to go down in terms of how they're priced in right now. All right, you go out to September. 1 cut is 38%, 2 cuts is 30. You're still at 18% chance. I don't even want to know what inflation looks like if we have no cuts by September. It would be bonkers for a new Fed chair. You're still quite there. 1 to 2 cuts by October, and you get to the final meeting of the year. 2 cuts, barely. 1 to 2 cuts. 1 to 2 cuts right now. There's an 18% chance of 3 cuts. Remember, the next Fed chair has 5 meetings. This is where the bell curve is right now. 1 to 2 cuts. So in terms of market expectations, risk, yeah. Now, we talk about the curve steepening, right? The yield on the 2-year. And look at this. As I'm talking here, Trump's talking, and we're getting so many headlines today, man. The hints keep coming. The teases, right? The hints. Why not? Trump signals he's a favorite. He has a favorite down to maybe 1 in my mind. He likes people to keep their attention, right? I'd say we're down to 3, but we're down to 2. And I probably can tell you we're down to maybe 1. Warsh is in the lead. You go to the betting markets, he's substantially in the lead. I'd be very surprised if it was Hassett. Think he's out. Rick Ryder could be in there. Reader could be in there for sure. And Christopher Waller's a player as well. But I think Hassett had his moment, and the market reacted. The president didn't like it. Wait, we'll see. You never know until it could always be somebody else, right? You could always have a wild card. I joked. Maybe it's Don Jr., right? Who knows? Who knows? Maybe it's the Treasury Secretary. But nonetheless, the news cycle today, it's a big one. Keep our eye on metals right now, giving back some of those gains. Gold, still up by $30. That's a little bit of a tail, though. Not the kind of all-time high you want, right? You make a high, and by the end of the day, you give up $100+ We're right there. 48.91. We're at 47.97 right now. You jump over to silver. Yeah, down $3. And silver, remarkably, is right back to where we were a week ago. Okay? Silver made this run up to these prices a week ago on the 14th. And gold at that time was trading about $150, $200 lower. All right, we jump over to Apple. So as I was coming on the air, we got a little Apple news. Now, if you've been watching the program, we were talking about this channel line, man, and you're getting there. I've been watching Apple the last few weeks. And look at the volume, right? You get the holiday weeks, you get a pickup, you get selling, okay? And this has been a great weekly channel line. You go back even a little bit further, you put it on a monthly, okay? You kind of been in this chop. Really, the low started going back in 2022. So you're talking about over 3 years on the low side, but the upper boundary is a nice area of resistance. And yeah, you are driving lower with force. Now, in a volume perspective, January doesn't look like we're going to put up big volume numbers, but put Apple on your radar, man. You make a run to the lower part of that channel line, you're looking, 220, depending on when you get down there. But we'll come back and we'll talk a little bit of Apple as they're revamping a few things when it comes to Siri. Yeah, they're going to revamp Siri as a built-in iPhone Mac chatbot to fend off OpenAI. The battle is on, man. Apple up by 0.9%. Microsoft? Look at Microsoft, yeah. Oof. Down 2.4%. Metashares up by 1.7%. The big dog, NVIDIA, up by 3.4%. Check it out. We're coming right back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. Getting into those Netflix numbers again for a brief moment. So Netflix down 3% right now. You jump over the news story, and this is a different one from the one we were talking about earlier today. So this puts in a little bit easier. It's always easier visuals, right? So there's their revenue. Okay, they're looking for $51 billion coming up in this current fiscal year. They just reported we had $45.18 billion last year. Okay, and that's the slowdown. We had quite a ramp up from 39 to 45, but percentage-wise, you just added the same $6 billion amount. Now you can say, man, they added the same amount, but percentage-wise, it's shrinking, right? That's what's remarkable. They judge you on percentage. They're not judging you on the raw amount. They want to see it ramp up on a percentage. Now, they do have 325 million subscribers, okay, but there's been a bit of a slowdown. Now, here's the part I wanted to get to that's in this article, wasn't in the prior one. Excuse me. Netflix remains the undisputed leader in streaming, but competition keeps picking up. Market research estimates that company's share of U.S. original content viewing fell below 60%, a new low. A new low. Yeah. So U.S. original content viewing. Yeah. And guess what? They need more original content. Okay, and how are they going to do it? They're going to go after Warner Brothers, and they're doing it. But that's, you look at this, you look at a revenue slowdown, you look at a content slowdown. Excuse me. So the battle's on, and it's been a heck of a pullback, man. Now, I talked about this morning. Okay, if you're looking at Netflix shares, let's take these off for some clarity here. You're right back at where we were in the beginning of last year, okay? Draw a line in the sand unless you're just holding this thing for 5 or 10 years. But if you're thinking of considering it all on this rundown and you've held it from 134 to 84, probably too late, right? If you've held it, but it's never too late, okay? Unless you're just holding this and you're willing to take it if it gets to zero, okay? Because any equity could at some point. Netflix ain't going to zero anytime soon, in my opinion. But if we break below this area, it's a one-way trip, man. And realistically, okay, you're going back to your earnings from October of 24, and you might go back all the way right here. The high there, 57.96, folks. And that's when you really ramped up. Okay, now you had lows out there, but you went from $48 to $134, and boy, it's been a straight trip down, and the volume does not say we are done just yet. On a weekly basis, it's only Wednesday, folks, of a 4-day trading week. Now, yeah, today's going to be a big day, and yesterday was as well. Okay, but you're going to have volume on the downside unless you close out this week on a green. But you're down by 2.7%, and hey, they're repricing some of that growth. But guess what? Longer term, yeah, I am looking for a buy right now because they are going to be able to turn that spigot back on, man. They're going to have a production house like no one's ever seen before, and they're going to have an ad revenue business that's only rivaled by maybe Meta and Google. Amazon, maybe, some of those just giants that are crushing it when it comes to advertising. Now, speaking of Meta, they're going to start running ads on Threads. This is what got me going, right? They're going to start running ads on Threads. So imagine, the ramp time that they allow. And this is the headline. So Meta is going to begin rolling out Threads ads globally. Yeah. They're going to begin to show advertising on Threads. No wonder Threads looks so weird because it's just so clean without ads. I could never quite orient my brain around why it just seems so basic. Not a bad thing, but it just seemed like, and yeah, it's because it's not cluttered with garbage and ads. All right. Threads. Now, what's interesting here is I don't know who this is. I saw this one earlier, and when was this? A couple days ago. Somebody shared this with me. And I don't know, because here, now this is from, I don't even know, okay? But they're talking about how it now exceeds X. You've had a pullback in X, of course, Twitter, and then you've had the ramp up in Threads. And this is only going for about a 2-year period. Amazing you can do that. But their numbers are about 100 to 150 million daily active. Meta says they're at 400 million. I always question how Meta talks about who is using their products, right? Meta AI, the amount of people using Meta AI on a daily basis is like bonkers. And I feel like they're manipulating the stats so that anytime you log in on Facebook and you use the search function, maybe they're telling you that you're using AI. And maybe you are, right? But is that really AI adoption? But you better believe this is going to matter, man, because you got hundreds of millions of daily active users, okay? This might be their side project. They're going to make a lot of money. They're an advertising powerhouse, and they're going to start selling ads, and you're going to start seeing it show it up in the earnings. Yeah, all users globally starting next week. Wall Street expect Threads to become a significant revenue driver for Meta as the company monetizes that platform. And boy, if you were around when they monetized Facebook, the acceleration, just unparalleled how he turned that thing into an advertising powerhouse, and then he ramped it right up to online advertising. Take a look at Meta. Been under pressure with Netflix. From $7.96, you gap lower on their earnings in October. And yeah, on this chart, you really can't find a lot of buying on the volume perspective right there. Meta, you're up by 1.7% today with the market, but we're not really with volume. Look at the volume on a day like today. You're not even competing with the volume of the last couple days as you're trading lower. Jump over the banks. JP Morgan up by 0.1%. I wanted to jump over this one. Let's see. JP Morgan's out there. I said JP Morgan. JP Morgan's not around anymore. Jamie Dimon is out there. All right, that's not the one. And he's talking about the 10% on the credit cards. Here we go. Now, forgive me. I had it. I can't find it. I'll pull it up. But yeah, he was saying that potentially you go for Vermont and Massachusetts, talking about Bernie Sanders and our senators, Elizabeth Warren. Hopefully they don't try that experiment, folks. Because here's the thing, right? Market forces dictate a higher interest rate. They do. The risk associated with a credit card in this current interest rate environment where the risk-free rate right now is about 3.5 to 4%, okay? You go out longer, it's longer, but you got risk in duration if you're buying 30-year, okay? You think you're getting a bargain buying a 30-year at 5%? 30 years? What's our debt going to be like in 30 years? You got to recognize duration risk, okay, when you're getting that, because that's why you're getting a higher premium, right? So when you can get risk-free returns, when you're talking about, a 5-year ladder for a CD right now is pushing almost 3.75%, okay? That market's going to dry up. Nobody's going to be giving out credit cards if they can just secure it with 10% for unsecured credit. But we'll talk about that. Banks have had quite a run. Markets rejoicing as tariffs are off yet again. We get the VIX plummeting and gold and metals giving back some of the gains. VIX $16.99. Come right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by 83 points right now, and we jump around to some of those tech stocks. NVIDIA, quite a day, man, 3.5% almost, and you're up by 150 billion in market cap. Now, this thing's been chopping around since July, right where we are since July. All right, and boy, if you're looking for the ability, I mean, this is what, just like, gold and silver need to breathe a little bit. Even a consolidation is breathing, right? And NVIDIA is breathing right now. I mean, this is quite a consolidation we're pushing right now. August, September, October, November, December, and January. We got that brief spike to higher prices in November. You pull back, but we've been in a range since, you're talking about 6 full months on NVIDIA. All right, let's jump over to some of the home builders today. Yeah, look at this. All right, let's check out the volume. Lennar up 2.5% right now. The last thing they wanted was higher yields. We're getting a bit of a reprieve right now. Nice sign of strength on January 9th. You take a look at the weekly. Yeah, decent volume on that acceleration out of the holidays, but nothing like we got back here. This was the real first sign of strength on Lennar. You break out November 17th, we pull back. You're going to need some more volume. Well, we are higher today. You jump over to DR Horton, up by 3% right now. That was a nice sign of strength. The week after the holidays, January 5th, you trade higher. Was that the highest volume month we've had since their July earnings? Almost, yeah. KB. Ooh, yeah, watch that volume on their last earnings. You look at these home builders. All right, Lennar, I love that strength you had out there in November. Just love it. You pull back on lighter volume. I think we're getting ready for the next leg higher. DR Horton, I like that strength we got coming out of the holidays, but KB Homes, not quite doing it on a volume perspective. Not encouraging. You get a nice sign of strength, but nothing compared to the sell-off we got on their earnings. You're going to have to get through that whole bar on KB. And yes, one of the other things out there, it's amazing how many people don't know the tax breaks that business people get for homes. They just don't understand it, and I don't blame them. It's not taught the way it should be, even in high schools. But one of the biggest benefactors is depreciation, right, on home ownership for investors. And yeah, Trump floats the idea to extend business tax break to homeowners. Well, here's the thing, though. I love tax breaks. Who doesn't, okay? Yeah, we like free pizza at lunch, and we got recess all day long. Somebody's got to pay for the taxes somewhere, okay? And yeah, we need affordability, but we also have a big problem. And what's going on with Japan over there? Yeah, that should be a little bit of a wake-up in terms of what can go on over here in terms of fiscal stimulus and in terms of just fiscal debt, in terms of the numbers we're down. Because what that does, of course, is it takes away the taxes, okay? And yeah, you jump over to Mr. Griffin. Japan bond sell-off, explicit warning for the U.S., as he puts it. So it's not like I'm talking crazy pills here, folks, okay? I love the idea of the tax haven, but it's always, how's it going to get paid for? All right? We're in an area where a budget just got passed that's projected to add about $4 trillion over 10 years. It's going to add it. It's going to be more than it was on pace for, right? That's an extra $4 trillion as a result of passing that. An extra $4 trillion as a result of passing that if we don't get growth that nobody forecasts right now. You can hope for it. It's not forecasted, though. So we need to start making sure that when we're doing tax breaks, okay, and listen, we need these tax breaks. How's it going to pay for it? What's going to happen? There's another side of the equation. Now, okay, that's what Ken Griffin's talking about, and it's kind of the case I make when you talk about 30-year. I'm not lending the government money for 30 years, especially not at the interest rate if I can't sell. You can always sell, right? That's the argument. But when you think about where our debt is and how long it's going to take to get that under control, what's it going to be like in 30 years? They're going to devalue that currency. There's a real chance that they run this economy hot, and I've talked about this as well. What's the risk of running the economy hot? Inflation. Well, if our biggest risk of running the economy hot is that our debt is paid off in dollars that aren't worth as much as they were, there's actually a benefit to that risk. Now, there's also many harms, okay? And they're hoping to run it hot without pushing inflation. But if that's the only risk, we almost need that type, unfortunately, of devaluation or something, okay? Because what you saw happen in Japan, yeah, they were done buying bonds, man. They were done. Okay, and they couldn't find a floor, and price kept dropping, and yield kept rising. And at some point, that could potentially hit our markets. So you see all these ideas. But yeah, it's not fair how investors get a leg up, and I would agree. And that's the reason, many times that Trump, for the heat he gets for not paying taxes, right? It's because he's a real estate player. And real estate investors, some of them get the best tax breaks around, folks. Best tax breaks around. And if you're unfamiliar with how depreciation works, okay, for an investor, imagine you buy a house, right? Let's say that the house is worth $200,000 and the land you put it on is worth $100,000. Simple math, okay? So you got a $200,000 house and the land's worth $100,000. Well, as an investor, you can depreciate the value of that house over a period of years. Let's just say it's 15 years. And sometimes with different tax laws, you get accelerated depreciation, so you can bring forward that depreciation to a bigger amounts in earlier years. But let's just say you're doing $200,000. Let's just say you're doing over 10 years, 15 years, all right? So what happens is, if you're doing over 10 years, I think it's 15, okay, but you're counting that as a loss. And it matters because, yeah, eventually you are going to have to put that money back into the house, et cetera, right? But it's a phantom number, right? So you have a house you buy for $300,000. Let's say you're renting it out at $1,600 a month. Okay, you buy a $300,000 home. It's on a $100,000 lot. It's got $200,000 in actual house value. You're renting it out for $1,600 a month. Well, over the course of the year, that's going to bring you in $19,200 of rent. Okay, now that's income for investors, right? You got to pay taxes on that income. Now, as an investor, you're going to get to write off expenses, maintenance, repairs. Okay, you also get to write off depreciation. So let's say you got a $200,000, let's say you got a $300,000 house and you're depreciating it over 15 years. That's $20,000 a year. Okay, so if you're taking $20,000 in rent a year, that's cash going into your pocket. Okay, and you can offset the cost, all right? But let's just say that's your net income, whatever. You get to write off that $20,000 in depreciation, and meanwhile, you didn't pay that $20,000 out of your pocket. So from a cash flow perspective, you're taking all this money, right? You have depreciation that offsets your income, and you pay no taxes. And yeah, so investors have a huge leg up. And there's many more advantages that go well beyond that, okay? Whether it's the tax breaks, and et cetera. And I always say that doesn't get talked about. I don't understand why it doesn't get talked about. You could easily just increase the homestead exemption for people who are living in their house. And right away, that provides a tax break for homeowners that reside in their home versus any type of investor that don't. Now, I saw the Treasury Secretary out there talking about mom and pops yesterday. You may have seen it too, right? We don't want to worry about the mom and pops that own 5, 10, 12 houses. Well, if you're a mom and pop that owns 12 houses, you are an astute real estate investor, and I would not call you a mom and pop, and kudos for getting it done. If you got 12 homes, and boy, there was quite an opportunity, right, since the market lows in 2008, 2010, 2012, and many people did that. But even those people, right, imagine, they wouldn't get the homestead exemption. Doesn't matter whether you're mom and pop or what. If you got an investment property, you're not living in it, you don't get a homestead exemption. If you're living in the place that you own, in Florida, you get a $50,000 homestead exemption. Comes off the value. Jump it up to 100. Jump it up to 150, man. Then people living in their houses get the tax break, and investors don't. One of the things you could do. We're coming back. One more segment, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's up by 81. Markets in the green. Tariffs on Europe, they're not happening. Not on February 1st, at least. You get a bit of a reprieve, and markets rejoice. And on a volume perspective, we'll see how the volume on the close comes in. We got 2 million contracts on the S&P. Did 2.3 million yesterday. But you always get some volume that comes in the final few minutes on the close. On the NASDAQ, same deal. Right up that level. 2 huge days. You know, rightfully so. You rip lower yesterday after a long weekend. We come back to the green of the news with tariffs. You get Davos today, and you get a head fake, and you trade higher in huge volume. 763,000 contracts in the NASDAQ. And you're at 851 yesterday. And, yeah, you jump back to that Jamie Dimon story. One point here is that, you know, the large credit card lenders, they haven't made changes to their interest rate. We'll see how this plays out. I mean, if you like 10%, why not 5%? Why not 3%? You know what? Why not 0.5%? All right, it just kind of illustrates. All right, not to be sarcastic, but no one's going to lend, and you can't. What are we going to start requiring that we have to allow credit card access to everyone at 5%? It just doesn't make sense when you get onto that degree. And we'll see how it plays out. But he's talking about, and he's saying, why don't you let it play out in Massachusetts and Vermont first? Because he knows it's going to be a disaster. Yeah, you should impose that credit card rate cap in Vermont and Massachusetts first. All right, and he's talking about the home states of Bernie Sanders and Elizabeth Warren, who have both advocated for a bill capping card rates at 10% for 5 years. Here's the problem with this, okay? The government could subsidize this. banks aren't going to subsidize it. They won't make money. They'll lose money. All right, the government could do that. They could just say, hey, if anybody's got credit card debt and they're paying it, the government will write you a stimulus check and we'll cover the balance that's over 10%. That would never happen either, right? No. So I don't know how that plays out, but rightfully to him, and you better believe, folks, that not to say it can't be done, but it'll kill that market. And that would be much more harmful to many people that unfortunately are using their credit cards to access credit when they need it. Markets right back where we were at 11 a.m. this morning. S&P's up 77. Folks, thanks for tuning in, spending your afternoon right here with me. Couldn't appreciate it more. Have a great night. Have a safe night out there. Enjoy it with your friends, your family. We'll see you back here tomorrow morning at 9 o'clock. Have a great one, folks.